I want to go over two different trades that I took. One was a losing trade, one was a winning trade. I want to go over my entries, my exits, my stop losses, and my overall thesis and reasoning for each setup. I'm also going to go into a strategy that I use which enables me to make more profits and capitalize on a larger move. I did it today. My original target was about a 2.5 to 1 risk to reward, but following this trick and using this strategy, I was able to make more profits and capitalize on a 6 to 1 risk to reward by following the momentum in the market and riding the trend. Before we get into it, I'm going to post a link in the description below for my Instagram at InvestiTrade. I definitely recommend everyone to follow me on there. I post daily trading recaps along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're missing out if you're not following it. To gain context and understand the setups, let's go over the pre-market plan. I post these every single day in the Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. So on the S&P right here, we had scenario number 1. We were watching dips into 3,800, 3,794 demand, which is the green boxes down here, to be bought up. We also had a key area of sellers or supply at 3824 and 3843, which I expected to be tough resistance. And if we could get above these levels, then I would expect more trending continuation to the upside. Again, it's important to just play levels and see how and what price does at these levels of interest. The area of sellers above was from FOMC last Wednesday on November 2nd, 2022. This was a key area as FOMC ranges are very, very important for direction and for context in the market. Now today on November 8th, the market opens up. We have our levels of interest and we get an immediate sell-off from this level. This 3824 area of sellers due to the overnight session was not very valid for me anymore because we didn't move far into it. A more important level was this 3843 to 3860 range, but the market opens up, and if you were watching the tape, the time and sales, level 2, also some people use bookmap, you would have spotted very large volume and very large selling activity at 3823, which is this area right here, and 3816, 3817, which is this area right here that I just highlighted. Also, looking at bookmap, you could obviously see two areas of high volume. There was some selling 3823, 3816, and this plays important to our analysis because this is new information that the market has developed. In the intraday commentary tab, this is where I update my thoughts throughout the day. I said keep an eye on these two levels in the short term. If we get below 3817, it's going to bring 3805. And if we get above 3823, it's going to bring 3830. So essentially, this was my bullish, bearish area. And then the market starts moving even lower. Then we get a move up, reject 3817 perfectly, and then start moving lower. And this is where I took my first trade. So I took ES short at 9:46 Eastern, around 3713. My stop loss was at 3817.5, which was this previous high in that area of sellers. So essentially what this looks like on the chart was the market came up, rejected 3817, then started moving lower, and I wanted to play the market short off the analysis that we just rejected 3817, and I was going to target first 3805, which is this little consolidation range right here, and if we broke below 3800, we had 3794 demand. That would have been a target for my short position. This also looks like this on bookmap. Essentially, we move down, we consolidate near the low, and then we start moving lower after rejecting that seller area from previous. Then we start going to the low, and this is where I take the market short, speculating a further drop. We never got that drop, and where I entered, the market immediately reversed, and I stopped out of this position as soon as we got above 3817 for a very small loss. It was about a 4 to 1 original risk to reward, and I realized a -1 risk to reward. I sold as soon as my stop loss triggers. No questions about it. I follow my plan to the T, and it was a $1,600 loss to start the day. Now, my next trade, which was the big winner today, was the S&P long, pretty much directly right after that I sold for a losing trade to begin with. Now, this was a 6.5 realized risk to reward, meaning when I sold my position, it was a 6.5 to 1 risk to reward. And it originally was planned to be a 2.5 to 1 risk to reward. And this is the strategy that I use that enables me to capitalize on a larger move as long as the market is trending in my direction and I'm trading on the same side of momentum of whichever participant I'm looking to be on. If I'm a buyer, I want to make sure there's buying momentum. And if I'm a seller, I want to make sure there's selling momentum. So what I said earlier, that is if we could get above 3823, it's going to bring 3830. The market failed at the low, as I just mentioned, where I stopped out. And then 2 minutes later, we start going up to 3823. This is where I became interested in getting long because the market started to build buying volume. On the tape, we saw large market aggressive buy orders. Again, you don't need bookmap. You could use the normal time and sales level 2. I just find bookmap to be visually more easy on the eye to read. But on the time and sales, there was large aggressive market buy orders hitting the ask, hitting the offer, indicating that now this seller at 3823, if we could get above him, I knew there wasn't any resistance or there really wasn't any supply to this 3830 to about pre-market highs at 3834. So that 3830 area was my original profit target. That was my plan to exit once 3830 triggers from my entry around 3821. I was risking 4 points to make about 8-9 points on this setup, a 2.5 to 1 risk to reward. When I got in, the market looked like this. My stop loss, where I considered my analysis to be incorrect on this setup, was below 3817, which was that exact area that my original stop loss was. Essentially that we're above it now, I would want it to act as support. And if this 3817 does not act as support, I knew my analysis had a high chance of being incorrect. And that's where I put my risk. So now I'm in long when the market looks like this. My risk is in play. My target is in play, and now I just sit back and react to what the market gives me. Right away, we started to break out, increasing buying pressure, increasing speed on the tape, increasing orders hitting the offer, and this setup started to look very, very good in my favor. We consolidate. Again, we pull back here. So my original target was 3830, right? This pullback right here never hit my stop loss. So I have zero reason to get out of this position. I see a lot of traders getting out because they see a red candle or they see the market not moving in their favor. You have to ask yourself, did the market hit your stop loss? Did it hit your target? If you say no to either of those, then you should still be in the trade. And if you exit prematurely, you are trading with not only too much size, but also too much emotions, which is going to be detrimental for long-term trading success, believe me. So this dip down should not scare you at all as long as you follow your plan and manage your emotions. This dip also was bought up with strong volume. Look at that high little area of volume that got hit at the offer as the market moved down at 3820. You see this little large order right here? About 3,500 lots directly at VWAP. VWAP acted as support perfectly, which is this little red line, and this pink line or purple line on this chart acted as support 2 different times. My original stop loss, 3817, never triggered. Yes, we came close, but we had no reason to panic as the market dipped back down into VWAP. More orders got filled, now around 66,000 lots at VWAP getting bought up at the offer as the market's moving down. That's an indication of strength if the market starts moving lower, and at offer trades are getting facilitated, supporting the market as we move lower. This to me looks extremely bullish, and now we have nothing stopping the market from rallying. Again, very, very strong buying in this area, and I could fast forward this as we broke out to 3830. And this is going to be very important now. You see how we strongly just broke above 3830? This is where it's vital to look at your journal and figure out and dissect your trading from the inside out. Normally, I would get out 50%, 70%, 90% of my position once my target triggers. However, I've noticed I've been leaving a lot of money on the table by protecting myself and selling prematurely, that I'm comfortable if this 3830 target gets met with strong buying, in this case since we're bullish, that I could keep holding this trade and maybe adjust my stop loss and boost it up. What I mean now by looking at the chart is here, this pink box was my original target, right? But I've noticed recently I sell at that target and then the market keeps reacting and moving higher. So going off my journal, if I didn't have my journal and I didn't analyze my trading from inside and out, this would have been a good sell from a normal chart and a normal technical analysis, what I recommend everybody to do. However, looking at my journal, I've been leaving a lot of meat on the bone and I have to capitalize on a larger move. We came into this pink box and it was not met with any selling. There was no signs of sellers. In fact, there was strong buying pretty much the whole time. As soon as we broke above 3830, there was no indication of a slowdown. We kept moving up. Now what I'm going to do is, instead of selling my position where I normally would, if you sell your position here, it is not a wrong thing to do. I don't want to make that sound bad. Selling your position here would be a good thing to do if you look at your journal and realize that you don't sell and the market reverses and what was once a nice win turns into a losing trade. That would be viable for you to sell at this target, or for me to sell at this target. However, if you notice you will leave a lot of meat on the bone, this would be valid to do. Maybe even sell 10% or 20% here. But I kept my full position on this trade because of the strength of buying. Now in the Discord, I said there's nothing stopping a rally into 3843, which if anybody is still in long, this could be a good area to protect your longs and sell there. That was my plan. That was what I was watching. And that's basically my thought process for this setup. No signs of sellers at this area. Then the market pulls back. So what I normally do is once I scale out, I will then boost my stop loss up. So I manage the trade properly that it can never go red on me. What I still did is I adjusted my stop loss up now to this 3830 area, which was my original target. So this pullback now, if we did start moving lower and I was incorrect on my thought process of holding this to 3843 target, if I was incorrect with that, this pullback at 3830, if my stop loss, which is now newly adjusted at 3830, if that did trigger, I still would have made my original 2.5 to 1 risk to reward that I originally planned at the start of this trade before I even opened it. The original planned risk to reward was a 2.5 to 1 risk to reward. So I still would have got that. If the market stopped me out, I would have still made profit on this setup. However, this pullback got bought up. Again, no signs of sellers. And then as soon as 3843 triggered, that was that area from FOMC last week. I was comfortable getting out of this position, 6.5 to 1 risk to reward. So excellent trade on this. It's vital to have and make sure your losses are small relative to your wins. I'm totally cool with taking losses. I take them all the time. I don't care if I lose, but I care if the losses are much larger or equal to my wins, because then I have to be right more times than not. You have to set yourself up that you could afford being wrong as much times as possible, yet when you are correct, those wins take care of those losses. That's how you set yourself up to win in trading. Now, everything that I've been explaining so far, we can look at this and say the same exact thing that I just mentioned, and I should have done it here at 3843 supply, right? I should have maybe now boosted my stop loss to maybe 3838, 3840 in this area right here, which is now this new green line, and not sold here, or maybe then sold 75% of it, right? We could talk about hypothetical scenarios all day long, but as long as I follow my plan, that's the only thing that matters. We can go back and analyze the trade in hindsight, but that's not going to matter. I don't care about that. It's about putting the pieces together as it happens, and we could come up with 100 different scenarios, what we could have done, what we should have done, what we did wrong, what we did right. But as long as you manage your risk and follow your edge and follow your plan, that's the only thing that really matters in the long run. So yeah, I could have not sold at 3843 and I could have capitalized on another 20-point rally and maybe got a 15 to 1 risk to reward, but I'm happy with my profits. I followed what I did, and the market could have easily rejected this 3843 supply and sold off, and I wouldn't be sitting here saying that, regretting selling here. We could have dumped and I could have turned this into a red position if I didn't protect myself. For example, this dip in the afternoon when we started aggressively selling off after this little double top, what if that happened at the area that I sold, but I didn't sell this position and we dumped? I would definitely regret not selling here, right? So it's kind of a double-edged sword. You don't have to be a perfect trader. You just have to follow your plan and manage your risk. This dip down came suddenly, came abruptly, heavy volume on news as the market dipped down. Guess where we got bought at? I'm not going to sit here and act like I took this trade. I was not even at my office when the market dumped and bounced off this level. So I could sit here and act like I took it, but I did not. I know members in my community absolutely killed this setup and caught this rally off demand. If you look at scenario number 1 from the pre-market plan, I expect dips into 3,800, 3,794 to be bought up. I cannot be bearish above these levels. Look what happened. The market dipped down into this level, heavy buying volume out of it, and a strong market rally from that into 3,824, into 3,843 where we closed, and the market sold off. Members in the InvestiTrade community also killing it. Best single day ever. Ever since he started tracking his performance, he doesn't feel the need to trade every day and then therefore enter bad setups. I can't stress how important it is to track your performance, know what you do right, and stop doing what you do incorrectly and remove it from your trading. This member, short, long, $980 profit. Another member just recently watched the futures videos, started trading the micro E-mini, able to be more consistent and less emotional. Small profits add up. This member, gotta love this group, really benefits from the analysis. Started 3 weeks ago when he had 7,000. Not only made it back, but he's green 5,000, and it's been working for him. Third week, he's made money that he could withdraw as a paycheck. Glad he made the purchase. You can start becoming consistent when you follow the process on a daily basis. The process brings profits. If you focus on profits, you're not going to get profits. But if you focus on the process, the profits will come in due time, like the members in the community. I'm not going to sit here and act like I have a crystal ball. I don't. The only thing I do is manage my risk and take setups that I'm comfortable with based off of my edge. I won't lie and say the price action was extremely easy to read today. It was definitely an easier type of trading day due to the ranges, but it is election day. We have big catalysts coming up this week, and the moves were very volatile, very abrupt, very sudden, and very unpredictable in a manner. However, if you use levels, you play price and volume, you can react to what the market gives you and capitalize on these setups. I hope this video helped. If it did, drop a like, comment if you have any questions. I'll go through the comments. Check out the links in the description below. And if you haven't joined the InvestiTrade team already, definitely check out the links below and hit the subscribe button. Peace out.